Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. Now, my next guest is Nick Santiago. He is the president and CEO of In the Money Stocks. Nick, thanks for coming on the show.
Always a pleasure to be here, Michael. Thank you.
Okay. All right, you want to start off talking today about the U.S. dollar?
Yeah. The U.S. dollar finally is back in sync, trading inverse to the S&P 500, and we had talked a while ago that we expect a little bit of a pullback in the dollar. While the market had extremely light volume, the dollar was going higher and the market was going higher. But now that the market is starting to, or I should say the S&P and a lot of companies in the S&P are starting to report earnings, you start to see that inverse relationship once again correlating. So I know a lot of traders, I was getting a lot of emails recently, people asking me, Nick, the dollar and the market are going higher. And I said, well, once earnings season comes back in and hopefully once volume picks up, that inverse relationship will occur, and it looks to be back on track again. So right now I would look for the dollar to pull back a little bit more. I'm showing very, very good support right around the $79 level on the U.S. dollar index futures. And that's where we're going to probably look for our bounce area in the dollar.
Okay. That is a pretty good trade from where it is right now, at the low 80s. That's a pretty good trade. Okay. Are you looking to buy it there or just wait for a bounce and short it again?
Well, I think you're going to look for the dollar to get to around that 79.25 area, 79.50 on the futures, and you could buy the dollar at that point. Also, when the dollar starts to rally this time around, that should bring the market back down. Okay.
All right. Then that leads me to let's go into the market before we hit some of the other indexes. The U.S. the S&P. I want to hear your thoughts on that with this play here.
We've had a real good run. I'm looking for a little bit of a pullback area, even beginning around maybe as soon as tomorrow or early next week. So I think that's what I've told my subscribers. It's not going to be anything more than a pullback at this stage of the game. The month of January usually is a bullish month, hence the name January Effect. So, we always give the month of January a little upside bias. Plus, it's usually a little difficult to pick out the January pivot. But I'm also starting to look for a pullback in this market, even around this time right now. We've just had an incredible run from that turn date that I gave you right around December 18th, 19th. So it's really just gone straight up, and we're overbought now. These markets are overbought, and they're due for a pullback shortly.
Okay. Is there a price target you're looking for the pullback?
Yeah, I'm thinking right around this 132 level, which is just a little bit higher from here on the spiders. That would be around 1316 to 1320 on the S&P cash.
Okay, that's a top.
Yeah, well, just for a pullback in the market. I don't think it's going to be permanent high. Really, I don't think the big rollover. I'm expecting a big rollover in 2012. So I just don't think we're there yet. Not in this kind of volume. This volume is just too light right now to look for any extreme turn in this market. But we were due for a pullback from an overbought condition.
Okay, all right. I'm confused, and I want to get this straight on my end. I'm looking at a price delayed chart where the S&P is at trading around 1307, and
okay.
And you're saying 1316 was the last number you said for the S&Ps. Is that your target for a top?
Well, I think for a pullback, just a pullback, not a top like this is the high for the year, but just a pullback area.
Okay, so that's a target where you would either take profits or look to short on a very short-term basis.
Correct.
Okay, now what I'm trying to get to is the pullback support area.
You're probably looking around a pullback into 1250, maybe 1240.
Okay, so really not a big
not
move.
Much at all.
Okay, then obviously you're still further bearish on this. Do you think we're really going to put the coals to the pedal to the metal on the next leg up? Is what I'm trying to say. Well,
I'm not sure how the next leg up is going to play out, but I just think that the first 2 to 3 months of this year is more of a choppy, range-bound market. So far, the market's been inflating pretty decently to the upside almost every day. Every move down, we reverse by the end of the day, which is a bullish sign overall. But there's no conviction in this market. There's no trading volume in this market, which ultimately, and there's a lot of gap ups in the morning. Gap ups in the morning, to me, are a warning sign of things to come. And, there's really no stability or legs underneath the table. And when the market starts to fall, it's going to fall pretty sharply. But I don't see the fall coming for quite some, for probably, I don't want to give the exact time out, but I'm thinking within the next few months.
Okay, I got it. Yeah, I got a cycle day out there about March 13th. But, we had a guest on right before you came on, and he was saying that he really didn't see a lot of institutional money flowing into this as relative to what it's done before this period of time. So is that what you're trying to say also, that there really isn't enough conviction in this to really give you the feeling that we're going to trend on this versus chop around?
Yeah, well, when you see volume like this, it's like you said last week. I thought that was pretty clever of you, but you said it's just a handful of high-frequency traders that are moving this market, and that's kind of what it is. So there really isn't a lot of conviction here, but a dull market is something you don't want to fight. And so I've told my subscribers, we're looking for a little pullback if you want to nibble in here, but don't get aggressive on the short side right now.
Good point. All right, before we move into the DB, you're the one that woke me up to this JP Morgan chart. And I'm looking at it. We got a gap up. We had a real strong day yesterday. What's that telling you?
Well, if you look at JPM right now, you're going to see that we're going to come into that October high. We still have not exceeded that level. And then after that, you're really going to come into the, I believe, the September top as well, or late August top. So JPM has a lot of overhead resistance here. As long as the volume remains light, I guess there is a chance for these financials to continue up a little bit more. But you got to start looking at JPM as hitting pretty good resistance here. And I know everybody's euphoric, the banks right now, but these banks are not out of the woods by a long shot here.
Okay, all right, well said. Let's move on to DB.
Yeah, Deutsche Bank. I wanted to bring that up today because these European banks have really been lagging the market. And recently, they've really caught some fire here. So Deutsche Bank in particular, since I guess January 9th, put in a little bit of a pivot low. And today, the stock is screaming higher. I guess there was a successful bond auction in Europe today and with Spanish and French debt. But again, the stock is extended now from that pivot low on January 9th. It's had a huge move. It's up $2.86 at the moment. I have to think going into this late October 31st sell-off, you're hitting very, very good resistance. I just want to warn your listeners, not to chase these banks here. Okay.
Is it in a position you think where, shorting it would be apropos?
Well, I think we're close to a short here. The problem is the volume. With light volume in this market the way it is, it's just a tough short. There's an old saying out there, Jesse Livermore used to say, never fight the tape. And, hopefully today, if we could get some kind of volume after earnings, you have a bunch of companies such as Intel and Google and Microsoft all reporting earnings after the close. If we get some volume in this market, then you can start to short it. Yeah.
Got it. Or trailing sell stop. Got it.
Sure.
Okay. CS.
Okay, same deal for CS. That's Credit Suisse. So you could see the big rally that thing has had. I think this stock is coming up into very, very good resistance levels right around the $26 area. If it goes up a little bit more, there's a very, very important gap fill area from November 8th that traders should watch for. That's right around 26.40. So this is just another European financial that is really catching a big move today. But I mean, there's a lot of pressure on these stocks going forward as they enter important resistance levels.
Or if it really gets exciting, I see another gap over 31. Or
yeah,
no, 30.
That's a big one. Yeah, that's a big one.
Okay, all right, we'll be watching that. At this point, I'm wondering, in the back of your mind about these stocks, are you starting to think that there is a trend is forming, or you're starting to think that this is a place where you may want to short it for the next slam?
Well, I'm watching these names, and I'd love to short right now, but when I see volume like this, as I mentioned, I'm a little bit more hesitant. I never like to fight the market. I always want to usually go with the trend, and these stocks are all trading well below their 200-day moving average, which still tells you they're still in a heap of trouble. So, but right now, in the month of January, you just got to be a little bit protective. Don't get aggressive on the short side. But the shorts are coming. The sell-off is coming in these names.
Okay, well, it's good to get a setup before we have to pull the trigger. Now, UBS, same thing?
Same exact thing. UBS is no different. The reason why I even brought all of those up is because there are three leading European banks, and they've been lagging the J.P. Morgans of the world and even Bank of America and Wells Fargo. So, now they're playing catch up, but it's happening at a time where, we just mentioned JPM, which I believe is the leader of all the banks, regardless if they're in Europe or not. JPM is coming into, very, very important resistance levels. So I would not be chasing these European banks. In fact, the resistance levels coming up on them are all very, very significant, and this is where we could see some pullbacks in these stocks.
Okay, and we're going to need to end on this one, Freeport-McMoRan, FCX.
Yeah, Freeport-McMoRan had earnings today. The stock has been all over the map this morning. It sold off, and it rallied back up. This copper trade is, I'm itching to short this, Michael. So as I believe copper is headed back down, we just need to see volume in this market. As soon as that happens, I think you could short Freeport-McMoRan, BHP, and just about everything else on the industrial and base metal complex.
Timing on that?
Soon.
Okay.
It's soon.
All right. Well, then let me tell them how they get the timing on that. They need to go to your trading room, right?
Come over to come over to our website at inthemoneystocks.com. Take a free trial into our intraday stock chat, or sign up for our research center. You'll get all of our nightly videos, all of our intraday posts. We put out a ton of content each and every day. You'll get all our trade setups and everything you're going to need for 2012.
And you'll get to watch Nick pull the trigger on these markets that we've been talking about.
Absolutely.
Nick, thanks for coming on.
Thank you very much, Michael. Have a great day.
You too.